bad debts and provision for doubtful accounts. Question: the following are the extracts from the trial balance of Mr. Gokul as on 31st December 2015. Sundry debtors 1,03,000, bad debts 8,000, provision for bad debts 7,000. Now coming to additional information, write off further bad debts rupees 3,000 and create provision of 5% on debtors for doubtful debts. Pass journal entries, prepare bad debts account, provision for bad debts, and show the effects on final accounts. So here we have to open two accounts, bad debts and provision for bad and doubtful debts. Let us see. So we have bad debt and provision for bad and doubtful debts. So bad debt account always shows a debit balance. So to balance brought down, so the opening balance to be recorded here. Opening balance 8,000. Then for provision for bad and doubtful debts, balance will be credit balance by balance brought down. Amount will be 7,000. So if you are getting a question like this, you have to put opening balance first, then you have to go for considering the adjustment. So when we are considering adjustment only, we need to consider the journal entries. Okay. Now first, write off further bad debts of rupees 3,000. Entry will be bad debt account debtor to debtors, amount rupees 3,000. So bad debt amount 3,000 to 3,000. Narration: further bad debts. So the posting will be in bad debt account to debtors 3,000. Now create a provision of 5% on debtors for doubtful debts. So 5%, what is the formula for calculating provision for bad and doubtful debts? That is debtors minus further bad debts if any into rate divided by 100. Okay. So the calculation of new provision. So new provision should be shown as the closing balance. Okay, that is the provision to be maintained. So to balance carried on, the calculation will be like this: new provision just wait. Okay, new provision is equal to debtors minus bad debts given in adjustment divided by 100 into rate. Okay, that is new provision is equal to 1,03,000 minus 3,000 into 5 divided by 100. So which is equal to 1,03,000 minus 3,000. 1 lakh into 5 divided by 100, which is equal to 5,000. So the new provision amount is 5,000. And for creating new provision, we won't write any entries. Okay. Now, after considering these two transactions, now we have to close our bad debts account 11,000. 11,000. Find out the balance amount, that is 11,000, and this 11,000 to be transferred to provision for bad and doubtful debts. Hence, in provision for bad and doubtful debts account, 2 bad debts, 11,000. Hence, entry will be provision for bad and doubtful debts account debtor to bad debts. Amount will be 11,000. Narration: bad debts transferred to provision account. You can specify provision for bad and doubtful account. Now we have to close our provision for bad and doubtful debts account. So here 16,000, transfer it 16,000. You will get a balance of 9,000. There you just write by P&L account. This is the actual profit amount to be debited in profit and loss account. This is our balancing figure. Hence, further entry will be P&L account debtor to provision for bad and doubtful account. Amount will be 9,000. Narration. The amount charged to, you can write provision amount or bad debt amount as the amount charged to P&L account. Okay. Now one more portion demanded from the question, that is show the effects on final accounts. So the effects on final accounts, that means the accounting treatment to be shown in the P&L account and balance sheet. That also we should do it. So profit and loss account, profit and loss account, a treatment like this. It is better to pause here. Okay. So this is our profit and loss account. I will write this to bad debts. So inner column. We are considering only debit side of the P&L account. Okay. So debit side of the P&L account to be considered. So bad debts, opening balance of bad debts 8,000, inner column 8,000, then add further bad debts, further bad debts 3,000, now total 11,000, add new provision, new provision amount is 5,000, total 16,000. Then less old provision, $7,000. So outer column amount will be 9,000. This is the amount actually debited in P&L account. Is it clear? Now the effect should be shown in the balance sheet. Now this is balance sheet. Liabilities, then assets, debtors, it's better to we should add one more column in the okay, debtors inner column. So this is inner column only. Okay, so debtors amount 1,03,000. Less further bad debts, $3,000. Amount will be 1 lakh. Then less new provision 5,000. Then in outer column 95,000. So this is accounting treatment to be shown in the final accounts. So this is very important question. Please take care of this. Sometimes instead of bad debts you can consider discount, and instead of provision for bad and doubtful debts account you will get a question based on provision for doubtful debts, provision for discount on debtors. The accounting procedure and the journal entries procedure are always same. The only thing is that instead of bad debt you have to specify discount allowed account, and provision for bad and doubtful debts account you have to specify discount on debtors. Thank you.